January 25th, 2026. The markets are closed. Most of the world is resting. But if you think the price of silver is still sitting comfortably at $103, you are already the victim of a gap up. While you slept through your Saturday night, while you enjoyed your Sunday brunch, the global financial system quietly entered crisis mode. And most retail investors won't realize what happened until it's already too late. Gray market trading, the overnight whisper network, where institutional money moves before the official open, just hit $18 per ounce. That's a 5% gap from Friday's New York close. And if you think that's shocking, technical analysts are now pointing to $115 as the next resistance level if momentum holds through Monday as Asian session. This is your final briefing before Black Monday begins. If you want to stay ahead of the herd while the mainstream media sleeps, make sure you're subscribed to this channel right now. We are the only ones covering this timeline. But here's what should terrify you. While you were relaxing this weekend, the U.S. physical silver supply chain didn't just crack, it collapsed. The biggest bullion dealers in America have effectively turned off the buy buttons. APMEX suspended pre-sales. JM Bullion is quoting 15 business days for fulfillment. That's 3 weeks, not 3 days. SD Bullion slapped purchase limits across their entire product line. This isn't a glitch in the system. This is the system breaking in real time. In less than 12 hours, the Asian markets open. Tokyo, Singapore, Shanghai. And when they do, the price discovery mechanism that kept silver orderly for decades is about to face its most severe stress test since the Hunt brothers tried to corner the market in 1980. Let me take you inside what happened yesterday, Saturday, January 24th. While most Americans were shopping, watching football, or simply enjoying their weekend, APMEX, America's largest bullion dealer, didn't just slow down operations. They fundamentally changed how they do business. 2 weeks ago, their CEO sent a letter to customers announcing unprecedented demand that required immediate operational restructuring. Shipping delays extended from their standard 1 business day to over 4 days. That's a 400% increase in processing time. But here's the detail that matters. Out of 31 core silver products that APMEX normally keeps in constant inventory, products they've sold continuously for years, only 21 were actually in stock by mid-January. 10 products simply vanished from available inventory. These aren't exotic collectibles. These are standard 1-ounce rounds and 10 ounces bars that normally have a limited supply because multiple mints produce them simultaneously. APMEX suspended the majority of their pre-sale listings unless they felt confident they could ship the product within 2 weeks. Read that again. The largest dealer in America is now refusing to take orders for products they do physically have in their warehouse. That's not normal market behavior. That's survival mode. I want to pause here for a second. This is the kind of on-the-ground data that CNBC and Bloomberg won't show you until it's too late. If you value this level of research and want us to keep exposing the physical shortage, hit that like button right now. It tells the algorithm that this information matters. Done. Let's keep going. And it gets worse. They implemented a $10,000 minimum on buyback orders. Think about what that signal means. When a dealer raises their buyback threshold by an order of magnitude, they're telling you they need to conserve inventory. They're retelling you they can't afford to let metal walk out the door at current prices because they don't know if they can replace it. JMB Bullion followed the same pattern. Customer reports flooding Reddit throughout January. Describe orders placed in late December, still showing label-created status with no tracking movement by January 14th. That's a 2-week processing backlog on what should be same-day fulfillment. Their official website now quotes 15+ business days for order completion. That effectively means if you order today, you might receive your silver by mid-February. Generic 1-ounce silver rounds at JM Bullion are now flagged as limited quantity. These are products that normally have unlimited supply, because multiple mints produce them. When unlimited supply products become limited quantity products, you're watching the physical market disconnect from the paper market in real time. SD Bullion issued an official notice on January 3rd announcing temporary purchase limits on select silver products due to unprecedented demand and supply chain disruptions. By late January, their delivery warnings escalated from 7 to 10-day delays to availability by March 31st for certain products. That's not a shipping delay. That's a forward contract on product that doesn't exist yet. Now, let's talk about what happened to premiums, because this is where you see the panic in the data. In normal market conditions, 100 silver bars trade at 40 cents to $2 over spot price. That's the standard dealer margin. It's been that way for years. This weekend, those same bars are trading at $4 to $8 per ounce over spot. Some dealers are quoting $8 to $9 over spot for February delivery for metal that doesn't ship for 3 weeks. That represents a 400 to 800% increase in dealer margins. When dealer premiums explode by 400%, you're not looking at normal supply and demand adjustments. You're looking at a run on the bank. Quick question for you, and I want you to be honest in the comments. Have you tried buying physical silver in the last 48 hours? Did you face these delays? Let me know below. I want to see how widespread this is. And it's not just the American dealers. The Royal Canadian Mint and TD Bank in Canada showed out of stock on nearly every silver bar product by early January. This is a coordinated continent-wide inventory crisis. Here's what the dealers won't tell you, but their actions reveal. They increased customer service headcount by 25%. They suspended sales of numismatic collectible silver to evaluate pricing, which is dealer speak, for we have no idea what this metal is actually worth right now. They've turned off pre-sales, implemented purchase limits, extended shipping times to 2 months, and raised buyback minimums to conserve inventory. When the 3 largest bullion dealers in America all take the same defensive actions during the same weekend, it's not a coincidence. It's coordination born from panic.